Hello everyone, welcome to another lovely episode from JFX. This is Elliott's Wave, okay? And if you're coming from the previous episode, which was about 5 minutes long, where I gave a review of the previous analysis I made on EURUSD, this you're seeing right here is basically the play out of that particular analysis I made. So on that particular video, about 5 minutes long, you can go check it out. We made a review of, I think that was May price action, which I traveled in April, so I was not making any video in April. So we just made a review in June, and that was about 2 weeks ago, I think, or a week ago. But on that particular video, I gave a review of the analysis I made on the previous video before that one, which was when EURUSD was around this point. So from this particular analysis, on the next video, I made a review that we're expecting this. Okay. So I say we're expecting this and we're expecting price to clear out this high. So if you've not watched that video, you might go check it out. And for those of you who are following up, one of the major reasons why I'm making it this way is because I'm trying to make a trackable result of using Elliott wave method. I'm basically trying to give you a live review of how you can use Elliott wave on your own and basically how it plays out mainly, after the mentorship program, because we did Elliott wave mentorship earlier this year, which the videos are about 9 episodes available on YouTube. And once you watch that particular video, you need some kind of practical, to be able to understand how to use this method on your own. So that's why I'm making these videos and this analysis. So you too can be able to make them yourself once you're done studying the mentorship program. So I'm not expecting you to understand a lot when you've not watched the mentorship program. So the mentorship are listed there so you can be able to understand what I'm trying to explain to you. So please go check it out if you have not checked it. There's a playlist where everything is arranged for you to understand what's going on. Now back to the analysis. So basically, this played out. Price cleared out the high, expecting a new range. And this you're seeing right here is not accurate. These are not measured because, like I told you guys when we were studying the mentorship program, Elliott wave requires Fibonacci ratios to understand where and where to expect reactions from. Which on that particular video, I showed you guys that this was basically price retracing into what the 61.8 Fibonacci level. And I told you guys that this particular level is a very significant level. That was about 2 episodes ago. And if price was not going to react from this, then we should expect a reaction from this. But at the same time, if you flip the Fibonacci tool to the other side, that is measuring from here up, you get this. Okay? So you say Fibonacci tool is basically one of the fundamental principles of using Elliott wave. And this is just measuring this particular range. I can guarantee you that if we decide to measure this range, we would also get a significant key level that price is currently actually mitigating. So that's how Fibonacci ratio can also help you in terms of insight. As you can see, 61.8 Fibonacci of the main range. So it can help you in getting great insights to what to expect and how to expect reactions while you're using Elliott wave method. Okay, so Elliott wave is more like the harmonic pattern method, which we're currently having the mentorship now. That method and this method are calculated methods. So you don't have to, pick everything yourself, just like SMC. You can follow rules and just wait for them to play out. Okay. But at the same time, you have to understand that on Elliott wave or on any calculated method, these are technical analysis tools. Technical analysis tools. They cannot help you to determine your winning rate or your success rate in trading. What you have to do on your own is that you have to apply a trading plan to how you use these methods to trade. Either you're using smart money concept, Elliott wave, harmonic pattern, whichever it is, your trading plan and your risk management determines the level of which you're going to make money from these particular methods. Okay, so regardless of how good you can be on technical analysis, that does not determine how much money you can make from the Forex market. Okay, now moving on to the next prediction, I'm going to give you guys a top-down analysis of what's going on EURUSD using my own perspective of Elliott wave. Okay, like I said, my own perspective, because majority of you might have been using Elliott wave for a very long time, and this is not how you use them. But at the same time, know that these are technical methods. Elliott wave can be made with smart money concept, which I've done, and most of you have already seen videos where I do that. Same with Wyckoff harmonic patterns. These are all technical methods, basically. So how you use them is basically your own perception of how they work. So I'm going to show you another top-down analysis, basically how I gave these predictions about 2 months ago. And I told you guys I use Elliott wave on the higher time frame. Okay, I use Elliott wave. I don't need to use Elliott wave on the lower time frame. So if you're using Elliott wave on the lower time frame, that's your business. I'm not saying it doesn't work, but I don't need to use it. I use smart money concept instead. So once I get my area of interest or my key level, like how I do here, when I'm going down the lower time frames, I'm going to get an entry. So I don't need to use all these to understand what's going on here. I can just use smart money concept. Okay. Same with this point and every other point below on the lower time frames. So this is the daily time frame, and I'm going to show you how my view of Elliott wave on EURUSD right now from the top down, perspective. So let's move over to the monthly time frame. Okay. So sorry, that's wrong. All right, so let's move to the monthly. And I'm going to take you to a different chart. All right, so because on the monthly time frame, I like to use Elliott wave to play out to predict from time back. As you can see, this is 2008. So using Elliott wave, I'm able to understand, basically what the trend might be doing. And this is outside our general perspective of the 4-hour time frame. Okay, so you have to understand that this is a higher point of view, and breaking it down to the lower time frame could require multiple trends. So the daily, the weekly might not be in line with what you're seeing on the monthly time frame, but that's okay. All right, this is why it's called the monthly time frame. So we're going to be using that as from years back to be able to understand what we're trying to do. All right, so looking at this, what you have on my screen here, you can basically understand that I already have a map of every single price action using Elliott wave on what's going on. So on this aspect here is what I showed you guys earlier on the daily time frame. So that's what we have on the lower time frame there. So if I go to the daily, that's why it's looking like that. It's basically the same thing. But on the higher time frame, I'm going to be showing you guys a much different perspective of what's going on, but more of an overview and how it's in line with what's going on over here. Okay. So this is predicting Elliott wave on EURUSD, and that is since 2019. No, 2009. This is 2009. So from this point here, we can see we had an impulsive wave here, then a massive correction. So I'm seeing this as a complex correction, an ABCDE, which started wave 2, and then move over to the longest wave of this particular range. Can you see, if you pay attention to this, from this high to this low, compared to wave 5 and wave 1, this would be the longest. That's why I think this is a bullish, impulsive wave. All right, so with this particular move now, we can see we're expecting something like this. But I'm going to break it down more easier for you to understand why I think this way. But I think this is an impulsive move. And then if we're going back up, it might be a correction in the higher time frame, which is why you see the A, B, C over here. And why we have this C here is also not calculated with the Fibonacci. I'm just, measuring out the resistance level that could basically move price back down. So because we have an impulsive wave here, so we're expecting a correction. All right, so we're expecting a correction, but this correction is a bullish monthly time frame move. So indirectly, we're saying the bullish move is a correction. The overall trend since 2009 would still be bearish, but we're currently in a bullish phase, and that would be maybe 2018, 2028. But let's look into the price actions of the lower time frame and see what could happen, in terms of this price action. Okay, because I told you guys this is a much wilder perspective. This is how Elliott wave can go. You can use smart money concept to be understanding, the demand, the supply, liquidity, all of that. But Elliott wave can give you an overview of the higher time frame trend in less than 30 minutes. That is, if you know how to use them and the rules, like what I just outlined here about wave 3 being the longest. And then you can pay attention to other rules like wave 4 not getting into the territory of wave 1. And what you have to understand also on this aspect is that most of these rules are based on Fibonacci and mathematical calculations. The market is not aware of them. So if they're working out, it's not because the market is aware of smart Elliott wave, sorry, and is trying to make Elliott wave make sense. No, this is actually saying Elliott wave is correctly predicting what's going on in the market, and the rules of which is used to identify areas of interest on Elliott wave are actually accurate. So as you can see here, the second rule, which would be wave 4 not getting into the territory of wave 1, which would be this. As you can see here, it's not within the territory of wave 1. And that is something we can say, it's also in line with the prediction we're trying to make. So let's take that out. And now when we talk about wave 4 has to also be a corrective wave, right? So this has to be a corrective wave. And when we're looking at wave 3, it has to be impulsive. So we confirm this is impulsive. Wave 2 has to also be corrective, which is obvious here. Wave 1 has to be impulsive. And then wave 5 also has to be impulsive. So basically, this is also outlining the movement of Elliott wave price action, and also trying to let us understand that this is possible. Remember, these are all predictions. We're trying to understand what's going on the trend. But when you look at this now, okay, let's leave the past data. We're able to understand what's going on in the past and what's going on here, which brings us to why we have a WXY pattern on the chart. Because from my own perspective and from my own opinion, I do think from wave 4, we started seeing a new price action movement because we were expecting wave C to go above this. That would be a proper correction. Okay. And then we're expecting something like 1, 2, 3, 4, 5, and then the bearish wave continues. But then we had a complex um, action happening here, which is wave C staying within the territory of wave A. That would be this wave, right? So this would be wave A, this would be wave B, and this would be wave C. And as we can see, wave C did not go above wave A. And that is to say, if that is going on, then something else is happening. Maybe a new pattern is forming. All right. And then if you look at the WXY pattern, it kind of like, outlines a possibility of something like this going on. And with it being a correction, which is wave 4, this also is in support of this being a W complex corrective wave. All right, because this will be the correction leg, and then wave Y would be the impulsive leg, and then we'd expect something else like this as well. Okay, now while all these positions are going on, this is still the monthly time frame, and we're just trying to understand what's going on here. So we're just going to be shrinking down the perspective till we get to maybe the daily time frame, and then on the 4-hour time frame, you can start using SMC to understand what's going on. So most of these patterns and most of these concepts, you might say Elliott wave is a little bit complex, you can't understand it, or maybe it might not be useful to you who is a smart money trader. Well, as you can see here, the higher time frame is very, 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 very predictable with Elliott wave method. So let's get into the lower time frame of this aspect so we can understand what's going on better. Now, on wave Y, which would be explaining how we got the WXY in the picture in the first place. So that is gone. Let's now shrink to the weekly time frame to see what's going on the weekly time frame. Now, from this point, you start to understand why my previous analysis had this as an impulsive wave and at the beginning of an impulsive wave. Because if you pay attention to what's going on here as an A, and then you pay attention to this as wave 5 and wave Y, you can then say wave A to wave B and trying to see what's going on here. Then you can basically understand that from the impulsive wave ABC, we understand that wave A is supposed to be impulsive, right? Wave B is the corrective, and then we're expecting an impulsive wave C, right? So at the same time, since wave C is supposed to be impulsive, and this is basically the end of wave 5, right? And that is from the longer, range from the monthly time frame from the analysis we made earlier. Now, since we're now on the weekly time frame, and we can basically understand where I got this whole idea from, with the A, B, C, and Y. And, before we get back to where we, originally was on previous analysis. Let me show you guys something unique about Fibonacci ratio and Elliott wave. Now, if you use the Fibonacci ratio from the wave A down to wave 5, which would be this range, we're trying to measure the wave A to see, the retracement of wave B and what leg that created. You can see the precise retracement and reaction from the 61.8 Fibonacci level. This is also showing you how significant Elliott wave and Fibonacci can be. And at the same time, when you're looking at this particular method here, you can also see that it's kind of like confirming that my analysis might be correct. Do you understand? Same way I did this previous prediction over here 2 episodes away. But when you now try to apply Elliott wave on the lower time frame, it's a little bit complex, because you're dealing with much smaller range. That is, you're trying to predict what's going on within this point, trying to get what's going on within this point. And most of those kind of stuffs are easier to do with smart money concept, which is why I prefer to use smart money concept on the lower time frame. And one of the reasons you see me making more videos on smart money concept is because most people who come to me for mentorship, they mostly prefer to go for the smart money concept. Do you understand? So I do more mentorship on smart money concept and I use that more often. But when it comes to Elliott wave is kind of like my best method when it comes to higher time frame because when you start seeing confirmations like this, it's just going to increase your beliefs in this particular method. It increases your confidence, in what you're trying to do, that there's every tendency that you're correct. Okay, so let me take this out. Now, since this is wave B, and we can see now, we confirm that this is wave B, we're now expecting wave C to form, right? And then if you look at the wave ABC, the average wave ABC pattern, taking out all these ideas, we understand that wave C is supposed to be, impulsive, just like wave A. And then wave B is supposed to be corrective if this is, an ABC pattern. That we can confirm over here as well. And when we look at the impulsive pattern, this will be the first leg, right? And that is supposed to be a 1. And expecting something like a 1, 2, 3, 4, 5. Let's put it this way. A 1, 2, 3, 4, 5. And since we're expecting something like this now, we now say, let's go to the lower time frame. That is maybe the daily time frame to see, the possibilities of a retracement coming. All right, and we can already see the 1, 2, 3, 4, 5 formed here. So this might likely be, wave 1, or this could just be 1, 2, 3, 4, 5 to form the wave 1 before the original wave 2 happens. It's much difficult to predict what is yet to happen, when it comes to Elliott wave because there are multiple possibilities. And this is why I prefer smart money concepts on the lower time frame because there are multiple possibilities of what's going on when you're using Elliott wave. Now, when you look at this price action here, let's put it this way. We have wave 1, okay? And from the previous analysis I made for you guys, you can see that this also confirms the direction of this being an impulsive wave. But then we have this reaction also happening here. So there's every tendency that this could be wave 5, and this could be 1. This could be wave 3. This could be wave 4. All right, so we might say this is wave 5. And this is one of the reasons why I say it's very, very difficult to predict what is next to happen with Elliott because there are multiple possibilities. There are multiple possibilities. But at the same time, this is my prediction. And on the higher time frame, like I said, I only use Elliott wave on the higher time frame. This is the daily time frame already. I still think we're bullish. And I think we are about to start a bearish correction, that might take price down to clear this low, something like this, and A, B, C. So this could form the wave 2 before we start to see something like a more impulsive range, to the upside. But on the monthly time frame, we might be in a bullish range. This might be a bullish trend. Okay, this might be a bullish trend, but we might be expecting a correction anytime soon. And this will be my prediction for what to come next. And if you're trying to understand where next Elliott wave could react from. That's something also the Fibonacci ratio can help you with when it comes to extension. But I won't be breaking that down much because I don't really use the extension. I don't have to predict that far since I'm an intraday trader. So I've not really explored those aspects of Elliott wave. But maybe in the future, we might have guests on the channels who are used to Elliott wave and would like to share their own insights to how they use Elliott wave and how they can benefit you with other aspects of this particular concept, like the alternating pattern and the complex corrections. But till then, this is my prediction for this month using top-down analysis on Elliott wave. I'll see you on the next episode. Bye.